Have you ever asked yourself what words like stocks, shares, or index funds mean? Or what exactly is the stock market? And how do people actually invest in the stock market? Well, not too long ago, I was asking the exact same questions. I'd heard the buzz, but had no real idea as to what the stock market was or how it worked, until one article changed everything. It was towards the end of the year 2020 when I learned that a bunch of executives were selling a huge amount of a certain company's shares, a company whose services I was using. This piqued my interest. The huge amount of stocks being sold triggered a decline in the share price, which to me was a signal to get into the markets and start buying since I had reason to trust that it would rebound. And as they say, the rest is history. That was the moment I jumped in and it kicked off my entire investing career. In today's video, I'm going to take you through exactly what happened, what I learned, and how that one moment helped shape my approach to investing ever since. Whether you're new to investing or just looking to understand the game a little better, this is a story you don't want to miss. Welcome to The Eighth Wonder, a channel dedicated to making compound interest your best interest. So let's kick things off by breaking down what the stock market actually is. In the most simplest of terms, the stock market is where people, called investors, buy and sell tiny pieces of companies called stocks or shares. Now here's how it works. Companies that want to grow often need more money, so they go public, meaning they list themselves on the stock market and offer shares to the public. When you buy one of those shares, you're essentially buying a small slice of that company. That's right, you become a part owner. The money the company raises from selling shares helps them expand. Maybe they open new stores, launch products, or build better technology. And in return, investors like you and me get a chance to earn a return if the company grows and the stock price goes up. So yeah, that officially makes me, and if you've ever bought a stock, you, an investor. So, after reading that article, I knew I had to act. I started asking around to figure out which broker platform I could trust, and soon enough, I got introduced to one of the cheapest and most reliable ones out there. At the time, I had some savings locked away in some notice deposit account, and I freed up a portion of it, and in January of 2021, I finally bought my first ever stock. That one move, it opened the door to a whole new world for me, a world full of lessons, some exciting, some humbling, but all of them valuable. And the very first lesson I learned was this: investing in the stock market is not a get rich quick scheme. We live in an instant world. Instant food, instant messaging, instant everything. But that mindset doesn't mix well with investing. When I first started investing, I thought I'd see profits within a day or two of buying a stock. Spoiler alert, I didn't. And honestly, that's not how real investing works. If you want to see real results in the stock market, you've got to play the long game. I'm talking 10 years minimum. In fact, Warren Buffett, who's arguably the greatest investor of our time, once said that his favorite holding period is forever. In the stocks I'm buying today, I'm not expecting crazy returns overnight. Sure, it can happen, but that's more in the world of stock trading than long-term investing. I've now been investing for just over 4 years, and I've seen firsthand how powerful it is to think long-term. It's like planting a tree. You find a good spot of soil, plant the seed, take care of it, and you wait. You don't get apples the next morning. A typical apple tree takes about 8 years to start bearing fruit. Investing is the same. If you're patient and you choose wisely, the rewards will come. So, if you want to be successful in the stock market, you've got to master the art of waiting. Trust the process, water your tree, and let time do the heavy lifting. And speaking of choosing wisely, let's talk about lesson number 2. If you don't know what to invest in, just invest in the market. Let's be real. With thousands of stocks to choose from, picking the right one can feel overwhelming. You start researching, watching videos, reading news, and the next thing you know, you're stuck in analysis paralysis. The good news is this: there's a simple solution for that: index funds. Think of index funds like a basket of top companies. Instead of buying shares in 10 or 20 different companies individually, you just buy into one fund and boom, invested in hundreds of companies all at once. One of the most popular ones is called the S&P 500, which tracks the 500 largest companies in the US by market value. Household names like Apple, Microsoft, Amazon, and many more are found within the S&P 500. When you invest in the S&P 500, your money is automatically spread across all 500 companies based on their size in the fund. So you're not betting in one company, you're betting on the economy as a whole. This is why the S&P 500 is often referred to as the market, because it has become the benchmark for almost everything else. Now here's why this matters, especially if you're new to investing or just don't have the time to research each and every company. Index funds are one of the safest and easiest ways to start. You don't need to be a market genius. You don't even need to check it every day. You just invest consistently over time and let the fund do the work for you. Personally, I recommend looking into the S&P 500. It's proven, diversified, pays dividends, and has historically delivered strong returns over the long term. And speaking of dividends, let's look at lesson number 3. The real benefit of investing. So why even invest in the first place? What's in it for you? Well, remember, when a company goes public, it's actually to raise money. Maybe they want to expand, launch new products, or even pay off debts. Whatever the reason, it creates an opportunity for investors like you and me. If that company does well and becomes profitable, meaning it makes more money than it spends, it can reward its shareholders. One way that it does that is through dividends. A dividend is basically a share of the company's profits that gets paid out to investors. It can be paid out monthly, quarterly, biannually, or once a year depending on the company. And it gets better. Some investors actually live off their dividends. Yep, people build entire strategies around buying stocks that regularly pay out dividends and using those payments as a steady stream of income. There's even a special group of companies known as the dividend aristocrats. These are companies that have not only paid out dividends for at least 25 years straight, but have increased the amount every single year. That's a strong sign of financial health and investor commitment. There's also index funds that track just these kinds of companies. Perfect if you want a more passive and diversified way to tap into steady dividend paying stocks. Now, quick reality check. Just because a company pays dividends doesn't mean it always will. Things change, markets shift, so don't put all your eggs in one basket. But here's the part I really love. If you reinvest your dividends instead of cashing them out, you can accelerate your investment growth big time thanks to compound interest. And that leads us into one of the most powerful ideas in investing. Lesson number 4. Compound interest can work in your favor. If you've been wondering why this channel was called the Eighth Wonder, well, this is where it all comes together. The name was inspired by a quote from none other than Albert Einstein, who once said that compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. What he meant is simple but powerful. When you invest consistently and reinvest your profits, your money starts to grow, and then that growth grows. And then that growth also grows. So let me break it down. Let's say your investment grows at 10% a year. And in year 1, that's 10% of your original amount. But in year 2, you're not just earning 10% of the original investment, you're earning 10% of the original plus last year's gains. That keeps building and building year after year. But here's the secret sauce. To really unlock the magic of compound interest, you have to do your part. This means reinvesting your dividends and consistently adding to your investment month after month, year after year. It's like adding fuel to a growing fire. Over time, it becomes something massive. Let's look at a practical example. Say you start investing $1,000 a month into something like the S&P 500 starting on the 1st of July 2025, and you do so consistently for 30 years, earning an average annual return of just 8%. Here's what that could look like on the 1st of July 2055. The total amount of money you would have put in would amount to $361,000. The total interest earned would be $433,200. Your final balance would be $794,200. That's over $433,000 that you would have made from just letting time and discipline do their thing. And here's what's even crazier. That number doesn't even include dividends. It assumes a flat 8% every year. In reality, some years will be lower and some higher, some even negative. But over the long term, history shows that the market goes up. This is what gives me peace of mind when it comes to my investments. I may not know what the market will do in the next month, but 30 years from now, I am confident it will be a whole lot higher than it is today. So let's take it back to where the journey all started. I was just someone who read an article about a group of executives selling shares. At that moment sparked my curiosity. I didn't fully understand what was going on, but I knew I had to learn more. Fast forward a few years, and I've now spent 4 solid years investing, making mistakes, learning lessons, and seeing real growth. Not just in my portfolio, but also in my mindset. And that's why I created this channel, to help people like you skip the confusion and start building something meaningful with your money. Here's a quick recap of the 4 key lessons I've learned so far. Number 1, investing isn't a get-rich-quick scheme. It's a long-term game that rewards patience. Number 2, if you don't know what to invest in the market itself. Invest in index funds that make it easy and accessible. Number 3, dividends are powerful. They can be a source of income and a tool for compounding. And number 4, compound interest is the 8th wonder of the world, and it only works if you give it time to do so. If you don't have a detailed plan for retirement yet, but you do want to make sure that you've got a solid nest egg when the time comes, then the compound interest strategy I've just shared is hands down one of the best places to start. If you want to see how compound interest could work for you, just hop onto a free online calculator and play with the numbers. Try different monthly amounts, timelines, and rates of return. You'll be amazed at how powerful time and consistency really can be. And when you combine that with a few other smart strategies, which I'll be breaking down in future videos, you'll be well on your way to a long-term financial peace of mind. So if that sounds like something you're interested in, make sure to hit that subscribe button and turn on notifications so you never miss a drop. Here are 4 biggest lessons I've learned from 4 years of investing in the stock market. I want to hear from you. Did any of these lessons stand out to you? If there's a topic you'd like me to do a deeper dive on, let me know in the comment section below. If you found value in this video, then show some love by leaving a like, and don't forget to share it with a friend. Thanks for watching. Hope to see you on the next one, but until then, stay invested.